This here is what nobody else wants to tell you. What we see here is a chart you've probably never seen before. It looks at the altcoin market cap, so all the cryptocurrencies that are not Bitcoin or Ethereum, and it also excludes the stable coins, and it sets this in relation to all of crypto, excluding the stable coins. Now, what does that mean? It means we're looking at the altcoin dominance. So how much of all of crypto is in alts? Now, why is this important? Because it measures if the additional risk that we take on by buying the smaller altcoins is actually getting compensated. Is it worth it to take on the additional risk of buying small altcoins over Bitcoin and Ethereum long term? Now, clearly, it was very much worth it up until the beginning of 2018. That's when the small altcoins outperformed by almost 9,000%. But since 2018, the altcoins were struggling. They were underperforming by 56%. Now there's a derivative of that chart, and that's here. This is the others market cap relative to all of crypto, excluding stablecoins. Now that just looks at the smaller altcoins. So the others market cap is all the altcoins that are not in the top 10. So this is only the small altcoins. This is all of the altcoins in total. Now for the small altcoins, it looks even worse, because while the decline from the all-time high is comparable with 55% underperformance, we are now at the upper end of that bearish trend. Now nobody knows if those lines in the sand will prevail and if we just continue to go down, but it doesn't look that attractive. Now here's the thing, both of those charts, they looked at market cap comparisons. How big is the market cap of all of the altcoins or of the smaller altcoins relative to the rest of crypto? Market cap comparisons though are not very precise in terms of returns. If we buy a crypto asset, then we get exposed to the price, not necessarily to the market cap. Now that differentiation is very important because check this out. This shows us how many new altcoins hit the market week over week. So this comes from Tokenomics.ai. And it tracks quite a lot of altcoins. Now, why does the number of new coins grow that much? Why are there all those additional tokens getting issued? And is there really the demand for hundreds of millions of new tokens every single week? Now, the reason for the supply expansion is that the insiders, the team, the early investors, they want to cash out over time. This here is an example. This is Worldcoin. We can see how the number of circulating WLD tokens over time goes up. And who gets those tokens? It's investors. It's a development team. It goes to reserve as well. And then since Worldcoin is paying out tokens, so that's for the new users of the platform, right? When they scan their irises, when they create their identity, that's also inflationary. That's also new WLD tokens. And this does have a massive impact. Have a look at the Worldcoin market cap over time and compare that with the long-term price development over time. The price peaked at close to $10 in March of 2024. The market cap continued to make new all-time highs. The price developed much, much worse, right? It went down from the all-time high by 95%. The market cap is at very comparable levels to when the price peaked. This token inflation matters, and so does the token inflation across all of the altcoins. And so just have a look at this, right? This is Worldcoin relative to Bitcoin. Now, this is not a Worldcoin video. I just want to make this example. This underperformance relative to BTC is massive, minus 96%. While the market cap comparisons, they aren't that bad. Again, this is the smaller altcoins relative to all of crypto. The dominance charts, and this is a kind of dominance chart, right? If we look at small altcoins relative to the rest, the dominance charts overstate how well the altcoins are doing. The chart is already ugly. The reality is much worse. Now we can take advantage of something like this, right? Instead of buying Worldcoin, we can buy Bitcoin and then short Worldcoin against that. So we open two positions. One of them is on rising prices of Bitcoin, another one on the falling price of Worldcoin, and we just play the delta. The idea is that Worldcoin will long-term underperform Bitcoin in this example. And if you bet on that over the last 2.5 years, you would have made 2,700%. And I really think that's the way to make money in crypto. It's not necessarily trying to find the few outliers that still make money in a bear market. I think it's better to just bet on the structure of the market. And the structure of the market is that most altcoins go down because of the token inflation. There's not enough demand for hundreds of millions of dollars every single week to buy into the altcoins. This is net selling by the insiders, by the team, by the venture capitalists. Now this looks interesting. This looks like a performance we want to emulate. Still, we do have our crashes with that every now and then. 70% over here, then we've got another 57% over here, or just recently close to 70% again. So where do those crashes come from? Why does sometimes Bitcoin underperform Worldcoin that much, given that the tokenomics or the supply growth is clear? I think it has become more and more of a popular trade to bet on those altcoins to continue to go down. And because of that, if there's too many people that bet on a declining price, it can be profitable for some whales that have very deep pockets to buy up the supply. Because if enough people bet on a falling price, they need to post some margin, right? They are shorting the asset. And if then the heavyweights, the big whales, they buy up the token, they're liquidating all of those short positions. And they then effectively have to buy back the asset. So those purchases happen through the perpetual futures, and they then through arbitrage bots get also relayed over to the spot market. We can see this in the Worldcoin price data as well, right? Whenever we shoot up quickly in the price, we do see quite strong short liquidations. We've seen it over here. We've seen it recently with the rally as well. But those short liquidations, they tend to revert relatively quickly afterwards. You can also see this here in the intraday, right? When we look at those movements in the very short term, there is quick manipulation, and then that manipulation gets unwinded again. Here is the hourly chart. Again, when there's very quick changes in the price, we tend to revert once the liquidations have been processed. Now, I like to look at what is currently short squeezed. Where do we currently have potential to maybe bet on falling prices, where then the market makers have to sell the asset again? This here comes from Bitcoin Strategy Analytics. That's the backtesting platform of this channel. And here we see how the volatility over time is changing. Now, currently there is no major short squeeze happening. That's why there's no strong volatility expansion for any of the tracked assets on Hyperliquid. But when this goes up to say 3x or even 4x, then this can be a good opportunity to bet on falling prices. This is in general what I like to do, right? This is my track record over the last 2 years when I started to publish my trades in real time. So we just look at where did we get a major short squeeze and where can we potentially then bet against that. So for example, over here, when we shorted layer 0 versus Bitcoin on the 2nd of April until the 15th of May, we just had a massive short squeeze. Market makers were manipulating layer 0. Then the momentum turned around and then we entered the short to bet on a falling price. So we flip this around, right? Instead of buying the asset, we bet on it going down versus BTC. So that's why the performance looks the way it does. Now, I cannot share every single position that's currently open, right? That's for the premium members. However, there is now this website over here. That's linked down below in the pinned comment. And so one of the free premium trades that I currently have open, that many of the premium members have open as well, that's shared over here. You can get it 100% for free without any payment, without any credit card. Either get it here via Telegram, you can click on that button, or you can scan this QR code. Alternatively, you can also plug in your email address, then you will send it to your email. Now, besides the trade, you will also get a tutorial video. And that tutorial video will explain how to do those relative valuation bets, what platform to use, how to set stop losses, etc. That's all explained in the premium video as well. It's also sent to your Telegram or email. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.